Well, how's it going, friends and family? My name is Amos. Let's talk about Microsoft. They just reported their earnings. For full transparency, I'm bullish about Microsoft and the trajectory of their future. Their top line increased by 18% year over year, and their bottom line on a GAAP basis increased 32% year over year. Paid artificial intelligence seats, Microsoft 365 Copilot, over 30 million paid seats. Sequentially, quarter over quarter, 50% increase from Q3 to Q4. That partly explains why Microsoft was up today at one point, 18.5, potentially 19% intraday. I think they finished the day at around 15%, but still, for a mega cap company to move 15% on a single trading day, that is simply remarkable. What else happened? I thought this was pretty funny, and that's why I highlighted it. LinkedIn, which is Microsoft's social media arm, because Google has YouTube and Meta has Facebook, and Microsoft, they have LinkedIn, the professional social media network, where if you're looking for a new job, or if you want to publicly disclose your resume for the internet, or for everyone to see, LinkedIn. That revenue increased by 12% year over year, which between you and me is kind of funny because that speaks volumes as to how many companies are now using it as a job site, job board, recruiting, headhunting ecosystem. So as that revenue continues to grow at a double-digit rate, I think that's pretty remarkable for their future, especially with their end goal of becoming a one-stop shop for everything in the professional realm. And if you take a look at Azure, their cloud revenue up 43% year over year. So when you want to tell me that capex is not working out, you talk to the facts, you talk to the data, 43%. But it wasn't all rainbows and sunshines. There was a little bit of negativity. And right there I have it highlighted. Their Windows products and devices, mainly the Microsoft Surface, some of the other stuff that is a differentiator from the Apple iPad, went down 7%, but also their gaming revenue went down by 10%. That is pretty bad. But these two things right there, it's a splash in the bucket. It doesn't really matter because the other arms of the business crushing. And that's why I truly like to invest into a company that is diversified so that if one area of the business is kind of struggling, the other ones can make up for it. If you're hyper focused on only one product or service and that thing struggles, you're going to get punished absolutely hard. But with Microsoft, I mean, Wall Street, amateur investors, people like you and me were turning a blind eye to that because we're like, it doesn't really matter because your revenue went up 18%. And then another call out that I have is Microsoft is a textbook definition of taking care of the shareholders because they returned $10.2 billion in the form of dividends and share buybacks in just the past 90 days. Just the past 90 days. Put that into perspective. There are some publicly traded companies out here where for the entirety of 365 days, they don't even generate $10 billion, let alone give back $10 billion in dividends and share buybacks. So can we give them their flowers because the props are due? Thank you, Microsoft. Move on to the next slide. This is just their Q4 financial summary, by the way, so that closes out their fiscal 2026 year. And the natural question is, you might be like, wait, hold on, Amos, it's July. And it's almost August. There's still plenty of time before 2026 is over. Well, that's because publicly traded companies, they all dictate the timeline of when they want to do accounting. So there's some companies right now where their fiscal year is 2027. It really depends on who you're taking a look at. So for Microsoft, their fiscal year 2026 is over. And something else that I want to call out is their gross margin is now 67%. That is bonkers. This ain't no financial advice. Now you hear? All right, we good now? Thank you. And for the entirety of 2026, their net profit was 40.3%. So after it's all said and done, that's a lot going into their pockets. $4 for every $10 they made is going into their pockets. That's juicy. And I guess in the bucket, something else that's negative is the total company headcount. So the amount of employees under their payroll, it decreased by 2%. And I think quite a few people in the gaming division, they were let go. So those severance costs are going to be baked into their P&L. It's not something that you want to see, especially for a company that's increasing their profits across the board and are executing numbers that are phenomenal. You don't want to see layoffs be happening. But on the other side of that perspective, there are some people saying, oh, now that the headcount is getting smaller, you're getting rid of the bloat, the fat, the people that aren't contributing or being value add to the organization. Yes, I can see that line of thought. But I think about it from the human element of like, these are people with families, with a mortgage, bills to pay, to get let go. You know what I'm saying? But from my understanding of the professional workplace, once you have Google, Amazon, Microsoft, Apple, let alone Tesla on your resume, I'm sure almost every single one of them, they're able to pivot into another big tech company. Now, I do want to spend some time on this slide because on a GAAP diluted basis, their EPS, which is the profits per share, the bottom line of the P&L, was $4.81. However, that number right there is artificially pumped, injecting a steroid needle right into the left nipple because 7 cents of that is attributed towards their investments in OpenAI. And then if you take a look at this line item, 33 cents of profits per share is attributed towards their investments in Anthropic. So if you take that away, then the actual GAAP EPS is $4.41, which is still pretty good, but it's not as juicy as $4.81. Someone else who's really guilty of this is Google. Except for them, I think about $6 of their profits per share were because of their investments in SpaceX and Anthropic. You take that away, I think their EPS should be around $2.90. That's a huge blow, going from $9 in their EPS to about $2.90. That's a big gap, like before I got braces. But for Microsoft, $4.41 to $4.81, not too bad, right? 40-cent difference, but it is worth calling out. And as we jump on over to the next slide, yes, this is what I want to talk about. So their backlog, how much more potential money they can earn once their data centers and capex and infrastructure is built out, $678 billion. So their backlog of potential revenue grew by 84% year over year. Guys, that is absolutely absurd and ridiculous. And that's why when people were bagging on Microsoft saying it's all over, it's time to short this stock, it's a has-been, I'm gonna buy some puts. Dude, I listened to that narrative and commentary and I just shook my head. I was like, dude, you guys don't understand. Once Microsoft is entrenched into an S&P 500 company and in that ecosystem, they're here today and here tomorrow, and their ecosystem, it's all encompassing. Not only is it the Office suite, but it's also Microsoft Teams, which most organizations and departments in that single company rely on a day-to-day basis to communicate with one another. Not to mention 30 to 40% of the company's data, information, and documents, it's probably on Microsoft's Azure, which is their cloud. So when people were saying, oh, vibe coding is going to make Microsoft obsolete, I was like, dude, they've never worked a day in their life in corporate America. Never going to happen. Tier 4 SaaS companies, I can see them disappearing, yes. But for a Tier 1 SaaS company like Microsoft, absolutely not. If you have no idea what I'm talking about, I uploaded a video ranging from Tier 1 all the way to Tier 4, breaking down different software companies into their respective bucket. For Microsoft, they are a Tier 1. But something about this that makes me wave the yellow flag is that the backlog increased by 25% if you get rid of their OpenAI customer. So OpenAI, they gamble on them being the biggest and the greatest LLM in the future. It's heavy. Just like Oracle, I think like 90% of their backlog is dedicated towards OpenAI. So for a lot of these big tech companies, they really need ChatGPT to be the winner of the AI race. But then again, I hate the idea that there's only room for one to succeed. I think as we go forward in the future, AI, chatbots, agentic AI, and all of that, it's going to be a commodity where multiple people can win in the race. For instance, when I think about the oil and gas field, it's not just ExxonMobil that's succeeding, right? There's also Chevron, there's also BP, there's also fill in the blank, and all of them are crushing it and are winning. There's enough money to go around for everyone, and that's starting to become my perspective about AI as well. Just because there's one company leading the race, it does not mean that everyone else has to suffer. And so when I think about the big dogs right now, it would be Microsoft, Amazon, Google, OpenAI, Anthropic, and I guess Tesla because they have their own AI model as well. I think it's called Grok. Not really sure, I never used it. But my whole thing is the companies that are not laying down the foundation, the capex right now in order to become a part of the tip of the spear, like in a marathon, right? Depending on the prestige of the race itself, you might have 500 runners, maybe 5,000. And my thinking is, it's not just the individual that finishes the cross line in first place is the only one that reaps the reward. Rather, I think it's going to be the top 10, top 20. I think for the other 4,990 individuals that do not finish in the top 10, I think they're going to fall behind. Meaning, circling back to big tech and them laying down billions of dollars in capex to build out the data centers, they're doing that right now to develop the relationships and partnerships with the S&P 500 companies. Because once you're in, get your foot in through the door, and they put all of their data into your cloud, into that ecosystem, they're not going to jump ship to go to a smaller fish. Especially now that we understand how expensive it is to develop your own AI or data center. And so my opinion, it could absolutely be wrong, even though they're spending some money right now. I think in the future, the amount of money and potential revenue they reap from that, from the data center they built, it's going to be a multiplier. And so I'm a fan of capex because in this case, seizing contracts and increasing your backlog and trying to prioritize the first mover's advantage, it's going to make all the difference. I could be wrong. That's what I'm thinking. I don't think you guys understand the cost of missing out. If Microsoft backs down, if Google backs down and allows Amazon to become the biggest fish in the pond, and for them to reap all of the potential clients and relationships and potential S&P 500 companies that are still not on the cloud, believe it or not, just this past year, I think Clorox, they just migrated their entire ecosystem into SAP's cloud. So there are some S&P 500 companies out there that are still not on a data center and on the cloud. So there's still a lot of money to be made. And so to just yield to Amazon and allow them to eat everything, that would be stupid of Google. That would be stupid of Microsoft. And that's why they're all spending that crap ton of money to stay competitive, but also to further their economic moat. I truly think if you're not in the top 10 of the first mover's advantage in this landscape of data centers, AI, LLM, I think like 5 to 10 years from now, you're going to be left in the dust. I think this is the new gold rush for a reason. It's like the age of the internet. Going from the 90s into the 2000s, it transforms the way we do work. And I think heading into 2030, 2040, the idea of work that we know of it as today, it's going to be rewritten in the future. But I digress. I'm sure I'm preaching to the choir at this point. What's the bigger reason for Microsoft ripping today, whereas Meta reported their earnings a day before and they went into the red? Well, for the calendar year 2026, not Microsoft's fiscal calendar, but from January 2026 to December 2026, the previous guidance in April that made Microsoft's stock sell off, they said we're going to spend about $190 billion on CapEx. And you guys remember, I said again and again and again and again on this channel, the first Mag 7 or big tech company to revise their CapEx numbers to the downside, meaning they're going to spend less money building out HVAC, warehouses, server racks. I said the market is going to reward them beyond belief. That's exactly what happens with Microsoft. Their new projected guidance for the next 5 months, $175 billion. So they're planning on spending $15 billion less dollars on CapEx, which is going to boost their free cash flow. And between you and me, Wall Street's nipples got absolutely sweaty at that. They were like, oh my gosh, let me pump Microsoft 18.8% on a single trading day. And so to bring it all home, what do I think Microsoft's valuation should be right now? Well, based on their numbers from this earnings and going into the future, they should realistically be $570 per share. The price I would pay is basically what they're trading for right now with a margin of safety baked in. But I think the real question is, would I buy Microsoft right now at $450, $456 a share? My whole thing is if you do not care about your cost basis, I know there's folks out here who do not care about value investing. If they really like a company or a stock, they'll just go all in, lump sum. They don't care what the price is because their investing thesis is in the next 5 to 10 years, it'll all be okay. Why would I sweat or lose sleep at buying something for $450 when it should be clearly $600 to $1,000 a share in the future? I get that perspective, but for me, I care about the cost basis because that maximizes the CAGR, right? The compound annual growth rate. Because think about it like this. Microsoft, not too long ago, they flirted with $350 a share. So to buy it at $350 versus at $450, and let's say they swing up to their inherent value of $570, that's a big difference in your gains from $350 to $570 versus $450 to $570. Then again, I've been known to be wrong about many things in life, so don't listen to me. Anyways, how do you guys feel about Microsoft? Are you happy? Are you scared? Do you wish you bought the Microsoft dip? Or do you think they're going to come tumbling down in the next week or so? Having said that, let me know your thoughts below in the comments section. I'll reply to you. I love you. Stay safe. Good luck in the stock market. And I will talk to you next time. I'm a happy camper. Of course I am, dude. I put thousands of dollars into Microsoft, and to see them go up like that, it's a good feeling. It's a good feeling. Just like the other day, my SAP investment went to the moon. I was so happy. Anyways, I'm going to get out of here. I'm going to edit this and upload it. Talk to you guys really soon.